Joining me right now with some reaction is the former chief economic advisor under President George Bush, 43, Ed Lazear. Ed, it's always a pleasure to see you. Thanks for being here.
Thank you, Maria. Always nice to be with you.
Well, we've been worried about a slowing economy, and we keep getting these signals that things are, in fact, slowing. Durable goods orders down 1.1%. Estimate calls for a decline of 0.8%. Your reaction?
Yeah, I agree. I think it is, I don't want to call it worrisome, but it's certainly not positive news. The soft part of the economy right now is the business sector. Consumers are still doing pretty well. Wages are up. We're seeing consumption grow at a reasonable pace. But if we look at the past and we say, where are we now relative to where we were, say, a year ago, the concern is on the business side. Durable goods orders are one indication of it. If you look at investment during the past half year and compare that to investment, say, in 2015, we're down considerably. We basically had no growth in investment over the first half of the year. So all of those numbers are a concern in terms of a slowing economy. Right now, we're still moving along. You know, we're not at recession levels, but if I'm thinking about where are we now, it does look like we're peaking relative to where we were about a year ago.
So what's driving things at this point? I mean, we've got all these uncertainties about trade, right, Ed? You've got USMCA hanging in the balance, President Trump's trade deal with Canada and Mexico on the top of the to-do list for Republicans, but Democrats seem to be stalling the vote. U.S. Trade Representative Robert Lighthizer met with House Democrats on the Hill yesterday, pushing for the adoption of this revision of NAFTA. The meeting comes as Iowa Senator Chuck Grassley warns it's unlikely that the House will act this year. But last hour, I spoke with Assistant to the President on Trade, Peter Navarro. Here's what he said about USMCA. Watch this. Tell us some of the sticking points that Lighthizer is going back and forth with the Democrats about, and why. What's the justification for not having this vote?
There's one real sticking point. That's Nancy Pelosi. She fiddles while the USMCA is in the deep freeze. The false narrative here is this whole issue about labor enforcement. That problem's effectively been solved. Ambassador Lighthizer has been doing a great job working with Democrats on the Hill, working with folks in Mexico, working with labor, working with everybody in between. This thing's ready to go.
It's ready to go. Meanwhile, Henry Cuellar, who's on the Appropriations Committee, he's a Democrat, he said on this program 20 minutes ago, quote, and I'm quoting, "We will pass USMCA this year." Ed, where do we stand on this in terms of its impact, this uncertainty impact on the broad economic growth story?
Well, the one thing I agree with Mr. Navarro about is that when we're thinking about trade, it is Canada and Mexico that's most important to us. I mean, China, of course, has gotten a tremendous amount of attention, but the big trading partners are Canada and Mexico. So that's really the deal. Now, the question is, what does USMCA replace? If we think about this relative to the status quo, I must say that I worry that the administration suffers a bit of delusions of grandeur on this. I heard the Navarro interview, and I'm not as optimistic about the effects of actually passing USMCA on growth in the economy. It would be a positive thing in large part because it would resolve uncertainty. And right now, I think having a deal that's out there that we don't really know whether it's going to be passed, whether it's not going to be passed, is not healthy for the economy. The problem is that it doesn't change things all that much. I don't think it's as dramatic a difference from NAFTA as others have talked about. If it does anything, it actually is more protectionist. I mean, look at what they're talking about. It's basically raising wages for producers in Mexico and Canada, mostly Mexico, making sure that they can't undercut American workers. So that's a protectionist move. I don't think it's going to be particularly helpful in terms of growing our economy.
Yeah. Okay. So you're not looking at USMCA as a must pass to move the needle on economic growth?
Well, again, as I said, I think it would be very nice to have that resolved, primarily because no one likes uncertainty. And just having this thing hang out there, and we don't know what the rules are going to be, is not a good thing for business, particularly when you're thinking about manufacturing, automotive, and so forth. So that's the problem there. But I think that, you know, in terms of the differences between USMCA and NAFTA, they're not that pronounced. And to the extent that there are differences, the differences are primarily in terms of what I would think of as protectionist moves, raising wages in other countries that might have some effect on our workers.
Yeah, and it's the same situation with China, right? The uncertainty of a China deal has people sitting on cash. Let me get your take on rates. And the ECB in the last hour announced that it is keeping rates unchanged in Europe. It will continue its bond purchases for as long as necessary. President Mario Draghi, just starting his final news conference of his tenure here, is saying that recent data shows protracted weakness in the Eurozone economy. Ed, what's your take on Europe's growth prospects and the rest of the world?
Well, you know, Europe is in a situation where they're trying to solve structural problems with monetary policy. Europe has had difficulties for really a couple of decades now, primarily because it does what I think of as the wrong thing on the fiscal side. They have high taxes, high spending. They have protectionist policies in terms of labor. You can't lay off workers and so forth. And so any little minor shock to their economy really throws them into a tailspin. And so what they try to do is they try to overcome that with really extreme monetary policy. That's probably not the best strategy. It's kind of worked in the short run, but as you see, whenever anything happens, they don't have the ability to pull out of that. The one nice thing about the United States, of course, is that we don't rely as heavily on monetary policy because we have a stronger structural environment for business in which to work. And so I think that's the big difference between the U.S. and the United States. So, you know, when you look at these negative rates and you say, is that a good idea? Using negative rates to solve structural problems is not a good idea.
Ed, do you think the U.S. is poised for a recession?
Well, you know, look, when you're at the peak or when you're growing at rates that are kind of consistent with being at the top of a business cycle, again, it's hard to stay there forever.
Yeah.
Remember, a recession just means that you're past the peak.
It's just a time. I mean, we are 10-plus years into the expansion. I get that. But, you know, you look at the Wall Street Journal's editorial board recent piece in the op-ed section, California's tax the rich boomerang. The board writes this: Democrats will have to soak the middle class even more than they already do to finance all of the new spending demand that they're creating in the good times. That's one reason they're pushing a referendum next year to remove the state's constitutional tax cap on commercial property. The liberal forecast in California always calls for higher taxes. So here we are in a 10-plus year of this expansion, and you're saying at some point, because of timing, it should turn down or it should turn into a recession at some point. You need something that tips the point. So maybe some of these tax proposals is that point.
Well, that's right. Actually, that was a terrific study. I literally just saw it presented last week. The person who wrote the study, one of the authors of the study, is a guy named Josh Rao, who's my colleague actually at Stanford, and he presented it. I went to the seminar where he presented it. It's terrific work, and essentially what it shows is it's not surprising to economists, at least conceptually, but the numbers are just really astounding. What he shows is that when you raise taxes, two things happen. First, you see people leaving the state. That's kind of an obvious thing. We know businesses that have left California and gone to Texas. But the other thing that he finds, which I think is particularly interesting, is that activity declines. So just the incentive effect of facing high taxes tends to induce people to reduce their activity in general. And those effects are actually quite large. The study, I think, is a very solid one. It's based on looking at changes in taxes that came about because of the state and local deductions that occurred a couple of years ago. And so those kinds of factors are pretty significant. So I think the point that you just made a minute ago about, you know, what's going to knock us off our growth path, those kinds of things can do it. Those are fundamental.
So I think what I hear you saying is, sure, we're going to have another recession at some point, but current economic backdrop doesn't feel like it's tomorrow.
That's right. And if you look at the market, I always use the S&P 500 as the best indicator of what the next 4 quarters are going to be.
All right.
You know, that looks like about 1.5% growth. So not a recession, but not breakout growth either.
All right. We will leave it there. Ed, always great to get your insights. So appreciate your time this morning.
Okay. Thank you, Maria. Pleasure to be with you.
We will see you soon. Ed Lazear coming to us this morning from Stanford.